Hello guys, welcome back. Again, this is Herminio and I'm happy to be back with our new topic, and this is the second of the series in the lecture series on venture capital. So venture capital, the history of venture capital. So welcome to our channel. Again, this is Herminio, and if you like our channel, like, comment, subscribe and share, and choose the notification, click the notification bell and choose all for you to get updated for our next videos. Shall we start? Now, venture capital is a subset of private equity which can be traced back to the 19th century. Again, uh, private equity financing is common even during the time of the 19th century, probably because of the Industrial Revolution. And secondly, venture capital only developed as an industry institutionalized after the Second World War. This is maybe because of the technologies that the Second World War brought to our times, or after the war. So before the Second World War, that the war happens in 1939 to 1945. Before that time, venture capital was primarily the domain of wealthy individuals and families like the JP Morgan, the Walsenbergs, the Vanderbilts, the Whitneys, the Rockefellers, and the Warburgs, who were notable investors in private companies. In 1938, Lawrence S. Rockefeller helped finance the creation of both Eastern Airlines and Douglas Aircraft, and the Rockefeller family had vast holdings in a variety of companies. Eric M. Warburg founded the E.M. Warburg and Company in 1938 also, which would ultimately become the Warburg Pincus, with investments in both leveraged buyouts and venture capital. Also, the Wallenberg family started investor in 1916 in Sweden and were early investors in several Swedish companies such as ABB, Atlas Copco, and Ericsson in the first half of the 20th century. Now, after the World War, only after 1945, that is after the Second World War, did true venture capital investment firms begin to emerge, notably with the founding of the American Research and Development Corporation and the G.H. Whitney and Company in 1946. This is the reason why Georges Doriot, the Harvard Business School professor, is known being the father of venture capital, as they founded the ERDC together with Carl Compton, the former president of MIT, and raised 3.5 million fund to invest in companies that commercialize technologies developed during the Second World War, particularly the X-ray technology. So this is the first investment ERDC took as a venture capital firm, and they try to look into technologies from the Second World War, and particularly the X-ray technology for cancer treatment. And in that time, the $200,000 that Doriot invested turned into 1.8 million US dollars in just 9 years. That happened when the company went public in 1955. Now, the venture capital in 1950s, 1960s, and 1970s. During the 1950s, putting a venture capital deal together may have required the help of 2 or 3 other organizations to complete the transaction. It was a business that was growing very rapidly, and as the business grew, the transaction grew exponentially. During the 1960s and 1970s, venture capital firms focused their investment activity primarily on starting and expanding companies. So it came to be almost synonymous with technology finance. Now, in 1980s, the public successes of the venture capital industries in the 1970s and early 1980s gave rise to a major proliferation of venture capital investment firms. In 1990s, the advent of the World Wide Web in the early 1990s reinvigorated venture capital as investors saw companies with huge potential being formed. Remember the criteria: the companies that could expand, the companies that has potential growth, the companies that continue to grow really are the target of venture capitalists. And Netscape and Amazon were founded in 1994, followed by Yahoo in 1995. All were funded by venture capital. Internet IPOs like the AOL in 1992, Netcom in 1994, UUNet, Spyglass, and Netscape in 1995, Lycos, Excite, Yahoo, CompuServe, Infosec, CNET, eTrade in 1996, and Amazon, On Sale, GoToNet, N2K, NextLink, Sportsline in 1997 generated enormous returns for their venture capital investors. So again, the coming of the internet is time when venture capitalists became very wealthy because of this company who is a highly growing company with so much potential for growth and so on. But of course, a lot of these companies are not present today except for those like Amazon, who is still very alive and strong and so valuable even in our time. So the venture capital in the 2000s with the bursting of the dot-com bubble in 2000 caused many venture capital firms to fail and financial returns in the sector also decline. Many companies in the 1990s that followed the internet related businesses, many of them failed, and that incurred a lot of losses also to investors. Although it was mainly funded by banks located in the Northeast, it is in the United States, venture capital became concentrated in the West Coast after the growth of the tech ecosystem, especially particularly in California, San Diego, Los Angeles, San Francisco, particularly in this area where the Silicon Valley is located, which was started by 8 engineers. We have the Fairchild Semiconductor. We call this one the Tritoros 8 from Williams Shockley's Semiconductor Laboratory is generally considered the first technology company to receive VC funding. Take note, in the West Coast, this is the first of all of the companies to receive a venture capital funding. The Shockley's Semiconductor Laboratory. It was funded by East Coast industrialist Sherman Fairchild and Fairchild Camera and Instrument Corporation. And Arthur Rock, an investment banker at Hayden Stone and Company in New York City, helped facilitate that deal and subsequently started one of the first VC firms in Silicon Valley. Davis and Rock funded some of the most influential technology companies, including Intel and Apple. So by 1992, 48% of all investment dollars went into the West Coast companies. So Northeast Coast industries accounted for just 20%. Now, in the United States, again, according to PitchBook and National Venture Capital Association, the situation has not changed much. During the fourth quarter of 2021, West Coast companies accounted for more than 1/3 of all deals, but more than 60% of the deal value. While the Mid-Atlantic region saw just around 1/5 of all deals and approximately 20% of all deal value. In the fourth quarter of 2021, though much of the action shifted to the Midwest, the value deals rose 265% in Denver and 331% in Chicago, while the number of West Coast deals is waning. The San Francisco Bay Area still dominates the VC world with 360 deals worth 25 billion US dollars. So again, in our example, the United States really is, when it comes to venture capital investments, still in the top in the world in the world arena of venture capitalism. Now, in the United States, there are $330 billion as of in 2021. The American venture capital backed companies raised nearly 330 billion US dollars in 2021. This is roughly doubled with a record of 166.6 billion US dollars set in 2020. So meaning to say that venture capital investments are really growing this fast by just looking at the comparisons between 2020 and 2021. It doubles. In the Philippines, which is a developing country that has recently been a recipient of significant venture capital investments, the lack of fully developed institutional framework, primarily financial and legal, on the development of the venture capital industry in the Philippines. These are some of the issues in the Philippines. But fully developed institutions, which are characteristics of developed countries, are typically necessary for the efficient operations of Western venture capital firms. So the recent venture capital investment had been flowing to developing countries in spite of the lack of the fully developed institutions. Again, we will have a new series of lecture related to history, particularly the Philippine history of venture capital. But this is just an introduction that in the Philippines, a developing country, there is already a wide experience of venture capital investments, and there is even without the fully developed institutional framework like the financial and legal uh, institutions that will support venture capital investments in the Philippines, still based on research that there are still a massive flow of funds among developing countries, even with the lack of various institutions that supports this kind of industry. I hope you enjoyed our series on venture capital. So you try, if you want to go back and learn more of our previous videos, should look at the link, the description below, and click the link for the first lecture on what is venture capital. Again, this is Herminio. If you like our video, like, subscribe, share, and click the notification bell. Choose all for you to get updated. Bye-bye, everyone. Have a